When the head of BHP's iron ore division, Ian Ashby, says China's demand for his product is flattening and will fall to single digits if it hasn't already, that gets some attention. The currency took an immediate hit after the words came out of his mouth, falling from 106.25 to 105.5, which is roughly where it stayed for the rest of the day. Now, the Australian dollar is many things all at once. It's a proxy for China, and especially China's demand for bulk commodities, which is what we saw today. But it's also just another risk asset for global trading funds, just like shares. This chart overlays the dollar and the global share index, and it's a very close match. The Australian dollar is also a reflection of the difference in interest rates between here and the rest of the world. And speaking of which, the Reserve Bank issued the minutes of its last meeting today, at which it left rates on hold. Now, it's always hard to sum up a long discussion in a couple of lines, but here goes. I think the key points were that the board thought the global economy was improving, and they also had a big debate about the restructuring of the Australian economy without really concluding whether the result is good or bad. Still, the money market thinks another rate cut is becoming less and less likely, as shown by the 90-day bill rate. It fell consistently in the second half of last year, anticipating the rate cuts that actually happened in November and December. But since January, it's been rising as confidence grows about the economy. The local share market didn't do much today. BHP fell, as did Wesfarmers, and the banks were mixed. Wall Street went up a bit last night. Europe was flat. Asian markets eased back. And that's finance.